Good morning, everyone. Central banks on hold. The news we got yesterday from the Bank of Japan, the ECB, and the FOMC was the same. They're all on hold for now. Nothing suggests any need for an immediate change in central bank policy. Accordingly, we're likely to remain in current ranges in the FX market for some time. The markets will follow Newton's first law of motion. A body at rest tends to stay at rest unless acted upon by some external force. The Bank of Japan yesterday left its forecast unchanged, and Bank of Japan Kuroda said the timing on hitting their 2% inflation target hasn't been pushed back at all. That implies no change in their policy for the time being. Eurozone inflation was a bit lower in April than the market had forecast, but it did indeed rise, as was expected. Furthermore, the ECB's bank lending survey for April confirmed the stabilization of bank lending conditions. The rise in the CPI, the bank lending survey, and the recent improvement in the PMIs can give the hawks on the ECB hope that their forecast recovery is gradually being realized and give them the patience to hang on at least until May, when they'll get a clean reading on inflation free of the distortions of the Easter holiday, or perhaps even to June, when the new forecast will be available. As expected, the Fed made no significant changes to either its policy or its message. It continued tapering down its bond purchases at the same pace. The FOMC is likely to remain on its current course, aiming to finish its bond purchases by either October or December at the latest. Meanwhile, it'll be watching the data to see when the time might be ripe to start raising rates. On that basis, it's unlikely that they'd see any reason to change their tone for several more months, perhaps not until the fall. With no near-term change in policy by the major central banks in sight, I expect current ranges to remain in place for the time being while the markets watch the data and pay close attention to comments from central bank officials. The technicals say largely the same thing. Currencies are caught in a range. Volatility is likely to remain low for the time being. I still believe that the market's underestimating the impact that the crisis in Ukraine is likely to have on the financial world and on risk appetite in particular. The tightening of credit in China remains another potential flashpoint for the global economy. The market's waiting for that external force to jolt it out of its resting conditions. The internal dynamics aren't likely to supply it for the time being. For more information, including technical analysis and comments on today's calendar, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Gittler, Global Head of FX Strategy at IronFX Global, wishing you solid trading.